All right, guys. So, yeah, I am recording this. Today is Tuesday, May 30th. It's here about noon Eastern time. And just want to do an update and show you my thoughts on Bitcoin and a few other things. I know Rocky's been just absolutely crushing the markets the past few days and weeks, in particular on these crashes, showing you guys how to scalp. So one thing I'll say, and I know we've said this several times, but when it comes to scalping, if you're new, scalping is kind of a skill in and of itself. It's a lot higher stress. It requires quicker execution. I actually, a few years ago, I stopped day trading. My old life was I basically day traded all day, every day for many, many years. And it caught up to me, the stress and the sedentary lifestyle, So what I did is I actually pulled back from that. And, as I've said in a lot of my videos and blog posts and stuff over the years, like my main focus is what I've found to be that I'm best at, which is swing trading. You have to figure out a trading style that fits your own risk tolerance and personality, because somebody who's maybe a great day trader or a scalper like Rocky, you might be able to get your skill level to his level or higher, or maybe not. There's no right or wrong answer when it comes to trading. The right answer is what works for you, right? And so for me, for those, I know we have a lot of new folks in the room. So, first and foremost, welcome to you guys that are new to us. And I just kind of wanted to set the stage, what I do. My primary focus is swing trading. My motto actually over the past few years has been trade less, profit more. I've found, and again, this is just for me personally, that the less I trade, meaning that the less I try to over manage trades, the more money I'll make. For example, just looking at Strat real quick, this is kind of the home run of the year for me as far as percentage gains go. And looking back in hindsight, these moves, if we scroll back, didn't mean to draw that. If we kind of scroll back here to, early April, this is actually where I took most of my profit, was on this kind of third leg, and, obviously on every move, but this was like 1,000% move, in the first couple of months here. And this thing, we got in October at 6 cents, and here we are today at $4.50. It looks like we have a little bit of a screen lag. Let me try to refresh this here. Video. Okay, there we go. So you guys should all be able to see Strat up here around 0.002, which is the equivalent of about $4.50 or so. You can see it's really going parabolic right now. But, we got in last October around 6 cents, and just kind of, honing in on the idea of trade less, profit more. If I tried to get overly, active with this position way back here in November, at this time, this move in November actually looked like a very big move, but I was patient because we knew more was coming. And so sometimes the hardest thing to do in trading is to let your winners run. Have you guys ever felt that? Have you guys ever felt the anxiety of when you're in a winning trade and you're up, it might be 5 or 10%, it might be 500 to 1,000%, but sometimes the less you do, meaning the less orders you place and the less stress that you put on yourself, the more money you can make. And in hindsight, obviously, if I held the whole position, I would have made a lot more money than I made on this trade, but it was actually a pretty damn massive trade nonetheless. So I'm okay. Yeah, less taxes too, less commissions, right? Less exchange fees. So and again, guys, like I'm just going to show you what works for me. That's what Rocky does. He shows you what works for him. And we want you guys to be self-sufficient traders to where you find what works for you, right? And I can show anybody a winning trading strategy, but trader A might execute it perfectly and do really, really well, where trader B, maybe it doesn't fit his or her personality or time frame or risk tolerance, and then they totally botch it and actually lose money, right? So that's why we focus so much on the, and we talk so much about the skill of trading. Like, of course, we want to treat trading as a business, but at the end of the day, it's a performance activity. It's like chess, it's like poker, it's like baseball or golf. It's high stakes performance activity. And where, I would say like one of, if not the top mistakes that I see traders make is over trading, and there was somebody in the room last week that was, kind of came clean and talked about how he made a ton of money swing trading and then got too aggressive and started trading and gave a lot of it back. And so that's one thing that I just want to help you guys avoid if you've never done that before. But again, this is kind of like a real world example of where if I got too aggressive and I got too nervous and I got bored and I just wanted to place orders, I wouldn't have made the amount that I've made. And that's also why I don't pick tops. I'm still holding about 5% of my original position, which is incredible. I mean, I'm still making money on this thing, but I closed the majority of it somewhere around like a 900% gain, just because the probabilities, right? The odds of a market exceeding 1,000, 2,000, 3,000% gains, it's not more than 50%. I'll tell you that. It's probably more or less than 5%, right? So that's how I like to manage, and that's how I like to trade, is looking for those home run trades, looking for the big 12-point buck, right? I use the analogy of hunting a lot in trading. A lot of traders, like they go into the woods, right? Like the markets are kind of like, going into the woods, and say you're sitting there and you're looking for a big deer or whatever you're hunting, and then, a little rabbit or a squirrel or a raccoon runs by, and then you just start using up your ammo because you're bored, right? You start shooting. Well, you're going to burn up all your ammo. You're probably going to burn up your focus. And, if and when the big trade presents itself to you, you're going to either not have the capital because you lost it on some bad trades, or you're going to be mentally exhausted from over trading, or maybe you've even killed your confidence. Another thing that I like to say is your most important asset really outside of your trading capital is your trading confidence. And if you can't trust yourself to make the right decisions, if you overtrade, or if you let your emotions kind of dictate your execution, then when the time comes for you to really, step up and press on the gas pedal for a big trade that has a high probability of winning, trading is really about just showing up and being ready when that happens. So that's what I want to help you guys, especially you new folks that maybe haven't traded before. The technical analysis side of things is like kind of the sexy part here, where, it's fun to look at charts. It's fun to use analysis, but trading is really mostly about the mental game. And we're actually going to be doing some more classes and stuff over the next few weeks focusing on the mental game, especially when there's a lot of movement, right? Like, as you guys have probably seen on Twitter and in the news and just everywhere out there, like when the markets start to move, emotions start to fly. And one of the best skills that you can develop as a trader outside of kind of the technical part is patience, right? Patience, discipline, and control. Because, I noticed that a lot of traders, whenever they get into trading, they want signals. Everybody wants to know, where do we buy? Where do we sell? Like, I probably get, between emails and tweets and stuff, dozens of people every single day of my life asking me, Chris, what do you think about X market? Is it a good time to buy or sell? And my answer is, it depends. And if you ever have to ask that question, what that tells me is you don't have a plan. You haven't thought through the probabilities and the possibilities, right? So that's what I want to kind of spend a little bit of time doing today is, get obviously like do a little bit of historic looking at what Bitcoin's done over the past couple of weeks, but also show you guys how I analyze the markets every day. Okay. So before we move on, does all that make sense? Do you guys understand my silly analogies of hunting? And, do you guys kind of understand why patience and just the mental game is so important? Everybody with me and ready to move on? Chris, how do you catch good trades using gainers on CoinMarketCap? Sure. We'll come back and we can look at that if we have some time. We do have a few videos in the members area and in the courses that talk about that. But yeah, if we have some time today, I'll try to go through an example or two. Awesome. All right. So I'm not sure why we have a delay in the charts here, but let me see if I can get over to Bitcoin. Yeah, it looks like we have quite a delay, so let me try to refresh this. So just to get everybody caught up on where we are and kind of what happened. So the last time I was on the mic was back on May 25th. So last Thursday. And what I was talking about in the room was how on this parabolic price action, when we went from about 2,500 up to about 2,800, I started actually scaling out. So what I said in the trading room was, okay, guys, I'm starting to sell into strength because of a couple of factors. The biggest being that we are going parabolic intraday. So the trend, once we broke out above 2280, the trend really started to speed up, right? And if you guys remember, on these few days, there was actually a news article that it seemed like it was all over Facebook and all of like the D level like news sites were all copying and pasting basically the same news article, which was if you bought $100 worth of Bitcoin in 2010, it was now worth $72 million. So that's a really sexy headline. But what they failed to really mention is only a handful of people were actually in Bitcoin back in 2010. But, when that went viral, then what happened is you had Dan Blazerian. If you guys know that guy, he's got over like 20 million subscribers on Instagram. I think it was like right up here near the top. He actually posted a video or something basically telling everybody, and I quote, "I just bought a shit ton of Bitcoin." And so I knew, I'm like, okay, all the news articles are hitting. You've got, basically the last of the dumb money that's rushing in here. And so what happened is we went parabolic very quickly from about, the low 2,500 mark up to 2,800. And that's where I said, okay, guys, because the market's going up so fast relative to the prior trend, I'm going to start taking profit. And I actually got some really good fills starting around the 2,600 level. My highest fill was 2,780 something. So, and what I was saying in the room was the reason why I'm closing into strength was because what happens in Bitcoin, we have another analogy, which is Bitcoin likes to take the stairs up and the elevator down. And what happens is when price is going up, nobody wants to sell, right? Everybody's like, yay, they have these euphoric feelings, right? But what happens is as soon as it starts to roll over, everybody notices that, and anybody that wanted to sell starts to jump ship at the same time. That's why like we typically see like a slow grind, and then especially when price starts to go up too quick, that's going to really start to get on a lot of people's radar. And when it started to roll over, once we snapped this kind of intraday support around the 2750s, we snapped all the way back to like 2200, in just a couple of hours, right? It was very, very fast. And then we got the bounce, and then we put in a lower high, and then we went for a fib extension and came down to retest support, really the next major level of support, which also happens to correlate with a big round number here around 2,000. Okay. So, you can see that's where we've bounced and we're kind of mid-range. We've come back up and established prior support turned resistance now. So we've got, call it like 2,300 is acting as resistance now. So this is actually a very healthy kind of predictable price pattern where you get, again, you have a trend, it starts to speed up, you have a shakeout, starts to speed up even more, and then it goes parabolic. It's kind of like a rocket. If you guys in school, if you ever did those bottle rockets or even an airplane, like if an airplane is taking off and it's at, a healthy kind of, elevation tilt, right? And it has a lot of power, you're going to keep climbing. But if you start to tilt it up too fast and you start to go parabolic and you point the nose of your plane directly up, right, vertical to the ground, what's going to happen is as soon as you run out of steam, you're going to roll over and crash, right? And that's what Bitcoin has done year after year after year is, and again, I actually have a YouTube video where I talk about this, the 7 steps of a bull cycle, where, the trend comes in, you have the early adopters, you have the breakout traders, and then you have the last of the dumb money that chases the highs, right? And those are usually the people that lose the most amount of money because even though everybody kind of laughs at how ridiculous and simple it sounds to buy low, sell high, it is absolutely incredible how many people do the exact opposite. I get comments all the time on my YouTube videos of people that are like, oh, Chris, you just talk about simple stuff like buy low and sell high. And I'm like, yeah, it's those people that make those comments that I know are pretty much doing the exact opposite. They're the ones that are chasing the high and they're the ones that are panicking at the low. And that's why we do these classes. We want to help you guys learn how to master your emotions. That way you can do the opposite, which is buy low and sell high. Oftentimes in trading, what sounds the most simple can be the most difficult to do just because of emotions, right? And until you've traded real money, like you don't know what that feels like. And if let's say you were kind of late to the game and maybe you even lost money. Maybe you were that person that chased the high or that panicked at the bottom. Like that's okay as long as you learn from your mistake and you fix it, right? What's not okay is if you do the bad habit consistently, because the more times that you do a bad habit, the more you reinforce that bad behavior and the more likely you are to do it again, right? So, before we move on, does that make sense, guys? Everybody with me on that? Do you understand, again, kind of what has happened over the past couple of weeks, how we went from a healthy trend to parabolic price action, why the market rolled over, why I started selling into strength? And again, just to kind of clarify, I still have Bitcoin. Like I didn't get all out. I closed about a quarter to a third of my long-term holdings. And now, so kind of looking at where we are right now, so it's a little after noon on Tuesday, the 30th of May. We want to look at the probabilities and the possibilities. Okay, so this is where I'm going to start moving the chart around a lot, and I'm going to put a lot of text on the chart. So if the chart doesn't keep up, that's okay. Again, I'm recording this and we'll have it in the members area, and then I'm also going to take a screenshot. So let me just go ahead and start typing here. So what we want to do, again, anytime, and this is, guys, this is the cycle, this is the flow of how you want to analyze any market at any given time. I feel like a lot of traders what they do is they kind of, whenever they step away from the markets, and it might be for an hour, it might be for a day, a week, or a month, whatever it is, like anytime that I come back to the markets to kind of reevaluate what's happening, this is the cycle that I go through, okay? And I'll lay this out, but the first thing that I look for is the big picture, okay? So I look at the big picture and determine, what are broad market conditions, okay? And so what that means is, everything from like, what's the market sentiment? What are the big trends intact? Has there been a shift? What are the major areas of, market structure, support, and resistance? Then from there, I go into intraday market environment. Okay. So environment. Okay. So intraday market environment is what's happening over the last several hours, maybe 12 to 24 hours at the most. Or what's happening right now? Like, is there a shift? Is there a panic? Is it consolidating? Right? Like, what's happening right now? And then, is there a trade setup? Right? Is there some kind of pattern with a trigger? Right? So we look for a pattern, and then we look for an entry trigger. Right? And then the fourth thing is, if there is a trade setup, then we go into management. Right? So this is basically the flow. This is like the big picture of like trade analysis. So at any given time, what I'm looking at, I never go into the market. Like let's say we're long, right? So let's say, we're in a long trade, and let's say I step away, I go to sleep and I wake up and then I come back to the computer. The wrong way to approach this is you sit down and you go, how's my trade going, with the hope, right? Like, hope is a 4-letter word, with the hope that your trade is either winning or running for a target, right? Like, mentally, guys, you always want to try to stay neutral. Like, anytime you look at a chart, instead of trying to force your will on the market, the best thing to do is to look at that and go, what are the probabilities and the possibilities? So start with, what is everything that the market could do right now, right? Like, well, it could hold this resistance or it could break through. Like, you want to look at both sides. You want to say, if bulls take over, right? If buyers take over, here's a likely scenario. If sellers take over, here's a likely scenario. And then it's always good to like kind of mentally accept that you don't know, right? Like, nobody knows for certain what's going to happen. But if you start by looking at everything that could happen, and then the next step is so you move from possibilities, right? Like all the possibilities, to the probabilities. What do you think is most likely to happen? What is the highest probability scenario, right? Like, sometimes you'll be very, very confident and you'll say, man, I bet there's, an 80 or 90% chance that we're going to do X. Or it could be, and this is actually probably 90% of the time, the answer is, well, I'm not really sure. There is no right move at this point. Most of the time in the markets, guys, the right thing to do is nothing. It's only at key moments should you actually take action on something. So most of the time, like, the outcome from this flow that I go through is, okay, I have an understanding of where we are, and that requires me to do nothing. Great, right? So let's do that now. So again, kind of taking a picture of the past couple of weeks, what I did, just taking you through this. I was already in a trade, so I wasn't looking for a trade entry, but once it started to go parabolic here, the big picture, the broad market conditions were, okay, we're going parabolic. The market sentiment is way too bullish. And I know Rocky was really dialed in on this, guys. Like, he was just a beast at, keeping you guys up to date and watching price action intraday. So that the intraday market environment was taking off. We started to top out. And again, I didn't pick the exact top with all my orders. I was scaling out, around the 2,600 level, got orders filled all the way up to like the 2700s. And then once it rolled over and bounced, I closed a little bit more here around the 2500s. So, did I pick a top? Basically. Did I get everything right out where I wanted? No, because it takes time to shuffle orders around and stuff like that. But what you don't want to do is like wait for the move to roll over and then sell at the bottom, right? Like that's the no-no. You want to either anticipate it and get out prior to the crash or wait for a bounce, right? So, we went from big picture, intraday market environment, the trade set up, I was already in a trade, and at that point I was managing. Now that we know what's happened, we rolled over, we had a lower high, and then we had a deeper push back to 2000, right, which was major market structure support. And what that basically means is it's just a major support area based on prior levels and the fact that 2000 is just a really good round number, okay? And then you can see we've bounced up and we've now established 2300. And again, I like to round off to like the nearest round numbers. I don't really deal in terms of exact prices. I look at areas. So we bounced up, came into 2300, and you can see we're kind of squeezing up into this zone now. So what I would do from here, I'm going to kind of clean this up, is looking at the possibilities and the probabilities. The market's either going to go one of two ways. It's either going to continue to go up over time, or this is going to be a top and it's going to go down. So what I usually do is my first analysis is I pull up some fib tools. So I look at the Fibonacci retracement, and then I'll pull it from the high to the last pivot low. So I'll mark this up with a big yellow line, and then I'll give my charts a minute to catch up. Okay. Looks like the delay might be getting less worse. So can you guys all see the fib retracement and the yellow line showing where I measured that? Okay, cool. All right, so what we've had is a bounce right here. You can see almost to the tick, a 50% retracement. And we've talked about this before, but what I usually look for is what I call the sweet spot retracement zone. And the sweet spot retracement, and I'll just mark this up. The sweet spot retracement is in between the 38% and the 61% pullback area. Okay. So that's where I have this yellow circle marked up. And you can see that's where we've come to. So this price action is actually very healthy right now, meaning it's not choppy, it's not confusing. It's very, very clear what's happened here. We had a strong, healthy trend. We went parabolic. We topped out right around 2,800. We had a deeper pullback to retest 2,000, and then we've had a 50% pullback. That's basically what's happened, right? So at this point, there's really, in my opinion, two major possibilities, okay? The first possibility, let's look at the bearish scenario first. If this 50% retracement holds as resistance, what I'm going to look at next is some fib extensions to the downside. And when it comes to the fib extensions, really the major areas that I look at, I'll just kind of mark these up. The first one is the 61% extension, and then the second is the 100%. I don't look at the shorter term ones because that's usually inside the range. So if we get another leg down from this area, the next level that I would anticipate to hold would be this 61% extension zone, which also correlates with this prior resistance and breakout level down here around 1,800. So you can see, again, what I like to do is line up prior price areas with Fibonacci areas. So yeah, 1,800 would be the first level. And then again, we got kind of a weird tick that throws off the chart there. But you can see there's also, I noticed this price level through here, which was prior resistance, turned support around 1600. And then the next fib level actually lines up with this price level around 1500. So these are kind of the three zones, 1800, 1600, and 1500. So that's the bear scenario. If we rolled over here and if we went for an extension to the downside. Now, here's what's happened. We've seen this price pattern several times after over the past 2 years, where we have a healthy trend, goes parabolic, pulls back, and blah, blah, blah. And then we have this bear scenario. And then what's happened over the past couple of years is every time we see this pattern, it's held a higher low, and it's actually ramped up to make a higher high, okay? So if we, again, I'm going to kind of clean this up a little bit. If we hold 2,000, right, say we get a pullback and we start to ramp up and 2,000 holds, where could we go from here? Well, so starting to shift our attention on the bull scenario, right, you can see a trend line through here. So I would anticipate this price level of 2,000 to hold as the low, right? So somewhere maybe in between 2,000, 2,100, if we get a pullback through here, and then that could ramp up to actually look like one of these ascending pennants or ascending triangle breakout patterns. So that would, if that played out, I would anticipate us to maybe consolidate for anywhere, I would say in between like maybe 2 to 7 days. Like if we're able to hold up above this level, you know, just looking at kind of, you know, time projections, I would say, you know, we might have a few days here of consolidation. Yeah, guys, we are recording this. So yeah, if audio or screen sharing isn't keeping up, and again, I'll take a screenshot of this here in a second. But you know, looking at kind of like a projection of price action, say we pulled back and then we bounced off of, you know, call it like 2,100, and then we started to put in resistance here, you know, squeeze into resistance around 2,300. This is kind of the bull scenario where if you're, you know, managing a trade, that gives you some management areas. If you're looking for another breakout potential, you know, this is where we could see it from. You know, around that 2,300. Say we got a deeper pullback and then it kind of rolled up. Okay. So if you notice, guys, even all the way up to this point, I still haven't talked about entries, right? I haven't talked about shorting. I haven't talked much. I gave you the breakout level, but all I'm doing so far right here is looking at areas and possibilities, right? So what that means for you, it depends on how you're trading. If you're scalping, obviously the bear scenario is probably the best thing that you want to look for because, you know, as Rocky's pointed out and demonstrated, and as a lot of you guys have made money the past week, you know, when the markets panic, that's a lot of times that you can either get good shorts or good bounce plays for, you know, quick gains. If we consolidate inside of this zone and we put in really strong resistance and it shows a clear breakout area, what could happen is a lot of people that are maybe starting to short this area might place stops back here, and that would be a break level where a short squeeze could happen. So anytime you have like strong resistance, like, you know, if you guys remember that we're in the room back here on the 18th, I actually took this breakout trade from about 1,800. I think I was getting in at like 1,887 or the fills that I remember. And so we took this up, and I scaled a lot out in between like 2,000 and 2,200. That was just like an extra like leveraged, you know, just kind of breakout trade in addition to my long-term holdings, right? So that if you look at this pattern back here in between the 13th and the 18th or so, this is kind of the similar, a very similar price pattern that we could get if the market wants to keep going. It's actually very, very similar, except this price pattern is just much bigger in dollar value, meaning the volatility is much bigger up here, but it's the exact same thing. And we were looking at the same potential, but once we held that higher low and then we squeezed up into this 1800 level, it gave for a really nice breakout kind of follow through trade, right? So what do you do? Okay, here's kind of the now that we know the possibilities and the probabilities. And actually, before we move on, let me just ask, does this make sense, guys? Do you guys understand both the bear and the bull scenario and kind of what we would look for on both sides of that? Just give me a quick why in the room if that makes sense and you're ready to move on. I'll actually do that. I'm going to mark up both sides of this real quick. And then I'll do a quick screenshot. Okay, so those are the possibilities. Now the probability, what's more likely, depends on what happens around this 2100 area. Basically the possibility right now that I'm focused on is consolidation. I don't think we're at a strong level where we're going to immediately, we could, again, anything could happen, but I think the highest probability scenario for the next day or two or three is consolidation. Now, I think that's the ranking of probabilities. Like my top probability would be number 1, short-term consolidation. And I'll post a picture of this too. The second highest probability would be a second move. Here, I'll call this a second bear move to prior support. And then the third highest would be an eventual breakout above 2300. Okay. Now, one thing that I've been thinking a lot about over the past couple of days and that nobody really knows the answer to is 2800 the top, right? That's the question on everybody's mind right now is 2800 the top? Or are we going to go for another leg? And the answer is, I don't know, right? That's one of the most important things that you can kind of admit to yourself in the markets is when you don't know. Because what happened last week, guys, is we had a ton of late money to the market. I mean, you had like Dan Blazarian pumping to his 20 million followers. You had that news article that went viral talking about $73 million. So there were a lot of chasers, and there were a lot of like old high school friends that I had that were finally like, hey, Chris, what's Bitcoin? So like it's one of those things where there has been a lot of late money buying. Now, I wouldn't be surprised to see one more run to the upside for kind of a long-term extension. So if we take a look, I'm going to do even like a much longer term scenario here. So if we break out to new all-time highs, where would that lead to? Okay. So this is what I would do. I would actually run an extension from the breakout level, right, to that high. Okay. So again, you'll notice I'm looking at this big bull trend with that parabolic price action in this pullback. And I'll take a picture of this one too. Yeah, if we can get another extension, because you'll notice we came back into the sweet spot retracement. So look, guys, just because we had a crash from 2,800 to 2,000 doesn't mean that the party's over. Like we had a sweet spot retracement, again, right there, kind of went over the 50% pullback, right? So the long-term bull scenario, this is what I see. If we're able to hold above 2,000, right? If we're able to really exceed this high, the next target is right around 3,500. Okay? So this would be kind of the next big extension zone. I'll take a picture of this. All right. So I popped that in the room. So those are targets on the upside. Okay. And again, right now, what I'm waiting for to know, because right now we don't know, we're mid-range, right? And it's all about timing. So yeah, guys, I actually have an extra wide monitor. It's a 3440 or whatever. So, but I don't know why we're getting a delay, because I'm on really, really fast internet. So that's weird. But that's the bull scenario. So when it comes to timing, what I'm waiting for is I'm waiting to see what happens inside of this zone. So if we roll over and we start to get a panic, you'll know where we're running to. If, say, the volume stays really low after the next, 2, 3, 4 days, say the volume fades and we just kind of we hold higher lows, and maybe we come up and we tag 2,300 a couple of times, and then it looks like we're squeezing into that. The second that we get a real breakout above this level and you see a spike in volume, if we're able to get a close above that level, that could be the continuation pattern to that next bull target. Okay? Does that make sense, guys? So again, right now, as far as timing goes, it's a wait and see. The trigger would be if we start to roll over and snap this intra-range support and then start to run for those targets. That would be, depending on how you're managing this, it could either be a trigger for you to take more profit, or a scalp trade, maybe to hedge the pullback, right? Or if you're holding and you're waiting to see what happens, and we hold higher lows and then we start to squeeze and break out, that could mean either hold your position that you're managing, looking to tell what to do, or maybe even an add or a new entry for a breakout, right? So it's all about timing. And like I said, 9 out of 10 times, guys, the right move in the markets is no action. Action should only happen when you have a trigger that meets one of your scenarios, right? So what I would not do, and this is what I kind of want to discourage you guys against doing, is obsessing over every little move inside of this range. We call that getting tick locked, right? Where you get locked in on every tick, and before you know it, you've been sitting there for 6 hours and you're completely exhausted and freaked out and you don't know why. And you're like, the market didn't do anything. Why do I feel so exhausted? Or why the hell did I just take 4 trades inside of a tight range with no volume, right? That can happen, So that's kind of the reason why I'm taking so much time to go through this, is to make sure that you guys don't do that. All right. Don't overtrade. That's if you plastered anything on the wall in front of you, rule number 1, don't overtrade. Rule number 2, plan your trades ahead of time. That way, when the market starts to move according to a scenario that you've mapped out prior to the fact, then you're ready, right? But if you're like one of those rookies that's, that just wants to say, well, I have no clue what I'm doing. I just want somebody to spoon feed me, and I'll react when the market's moving, and then I'll freak out, and then you end up selling a low or buying a high. That's how that stuff actually happens. So that's why, every day, guys, anytime you sit down in front of the computer, start with this process. Go slow. Say, look, I'm going to take the next half hour and I'm just going to mark up my charts. I'm going to write notes about what I think could happen. And then if you guys are using Coinigy, mark it up just like I did. Take a picture. And then when Rocky or I does the market update, you can post a chart and say, hey guys, these are my thoughts on this market. What do you think? Do you see what I see? Do you see something else? And then we can give you feedback. I prefer that much better than you guys just saying hey, what do you think of this market? Is it going to go up or down? Well, it depends. There's a process to this whole trading thing, right? And if you take it seriously and you look at it as a process and you plan things in advance, you're going to be prepared when the market triggers something that's actually worth taking action on. and you're going to be able to keep your emotions at bay much better than just kind of letting the market dictate. Well, the market's going up, I'm happy. The market's going down, I'm freaking out, right? Like, if you find yourself reacting to every little move in the market, that's wrong. That's bad. If you find yourself planning ahead of time and then knowing with confidence when you should even pay attention, because guys, I mean, as you know, like, I don't sit in front of my charts and watch the markets all day. I'll set alerts on my phone. I'll box an area. So like, you know, and you could do this on here too. Like I would, for this scenario, I'd put like an alert, maybe like right around here, like right around this resistance level, maybe below it. So if it starts to approach it, I get alerted. And then maybe I'll set an alert for below the last prior low. So if there's any choppy price action here, I don't even care about it. I don't even watch it. It means nothing to me. But if those areas break, I know that's a trigger for one of my scenarios. So then I'll take action, right? Yeah, so on my phone, I use, what's it called? Blockfolio. I have actually, sometimes I'll set alerts on multiple things. So if I have my computer up, I'll use Coinigy. They also have SMS alerts. Blockfolio is a really good one. One of you guys actually recommended that to me a couple months ago, I think. That's Blockfolio. Also, like Coinbase has alerts. Zero Block has alerts. So if in doubt, set multiple alerts, right? Yeah, there you go, Big K. Bitcoin Widget, Paranoid Checker. Yeah. Tab Trader's another one. So there's several out there now. And you know, it's a lot better than like 2014 when I was traveling around the world. Like, it was pretty funny. I mean, I think I had zero block alerts, but that was it. And we had some trades at some really funny times. Like, I'd be like taking off in an airplane, literally like going down the taxiway trying to get off trades. Like, that stuff's crazy. But anyway, guys, does all this make sense? Is it helpful? Is it confusing? Do you guys understand both sides of the trade? What the target areas are? What the triggers for one of these scenarios would be? Cool. I'm going to go ahead and stop the recording now, and then we'll upload this to the members area.